Welcome to It's the Economy. Bad loans in unsecured credit was a key factor that had hurt many banks and NBFC balance sheets in 2024. A sharp 30% or actually 28.5% increase in year-on-year growth in unsecured credit had led the Reserve Bank in November 2023 to increase risk weights on unsecured loans. Although they've removed the reduced the risk weights on NBFCs, the Reserve Bank has not reduced the risk weights on unsecured loan. Now, obviously, when risk weights are high, banks have to keep more capital for unsecured loans. The trend of rising defaults in unsecured loans, is it still a problem or has it receded? That's the question we are asking today. And who better to answer than the chief of India's largest credit scoring bureau, CIBIL. Joining me is Bhavesh Jain, Managing Director and CEO at TransUnion CIBIL. Bhavesh, thank you very much indeed for joining and coming over to our studio.
Thank you so much, Latha.
Okay.
Great to be on your show.
Okay.
And to your question around...
Yeah, mainly the question is unsecured credit. You know, we had that problem a year ago. Reserve Bank very importantly reduced risk weight on NBFCs. They did not reduce risk weight on unsecured loan. So is there still something to fear that, there can be more NPAs?
So there's a good news that the overall retail delinquency, 90 plus on balances, have actually year on year improved.
Okay.
So
the number of people 90 days past due payment, defaults have come down.
Yes, defaults have come down. It's 1.9%.
Okay.
So 22 basis point reduction year on year. And that's not just year on year. In fact, quarter on quarter. So sequentially, when we look at December 24 quarter over September 24 quarter, it's actually reduced. It's reduced. And when we break down into secured and unsecured, secured actually housing loan, auto, two-wheeler, the delinquency have actually got better.
Okay.
It's reduced. And only product which are actually deteriorated marginally is actually credit cards.
No, that is the point. Though. Even at that time, I don't think the RBI was worried about secured loans. Home loans and auto loans were not their problem. Their problem was personal loan, credit card and BNPL, consumer durable, buy now, pay later loans. How is the numbers?
So personal loan has remained same. Okay. The reason I'm saying even the stabilization of delinquencies is good news because delinquencies of ratio of your bad sort of loans going as well as in terms of the credit growth. So credit growth has slowed down. In spite of that, personal loan delinquencies have stabilized year on year.
So as a percentage, they have come down.
Exactly. On credit cards, there have been significant decline on growth and hence you have delinquencies going up. And there is another reason that credit cards are used by consumers at different segments. And if they have to decide on a payment hierarchy, they would actually pay on a housing loan or two-wheeler and then pay on credit card.
That's true. That is true. Yeah, so that is another reason why it may be suffering. Okay, what is the performance of, rural versus urban? Is there any finer distinction you can make in terms of unsecured loan? I mean, I'm veering around to the MFI problem. So is it that rural defaults more? Or tier 4 defaults more than, I think you all do a city-wise.
Yes.
So are metros defaulting more?
So actually, before I go into delinquency, the good thing is that when we look at the overall India credit market, the demand is higher post-COVID and specifically last 2 years from the semi-urban and rural locations as compared to urban. One. Second is that within semi-urban and rural, the credit demand is higher for younger consumers, which is less than 35 years.
Okay.
Third is that, yes, the Gen Zs prefer the consumption loan because they want to go for shorter tenures, the year and now needs. And then to your point, yes, bad borrower is a bad borrower, irrespective of the location. So those geographical nuances are not coming. It's more about a customer on the margin who is finding it difficult to pay in case of any instability in their financials.
I don't know whether you'll even take this, but are Gen Zs more likely to default? Is it that once you're over 35, you're less likely to default? Anything like that?
No, actually.
There's no age bias.
There is no age biases here. Gen Zs prefer the short-term loans as compared to the big-ticket loans. And there is a reason, if I may say, because when you look at the average age of consumption loan in the country is coming down every year. So it's in the early 30s where people prefer a credit card, a personal loan, or a consumer durable loan. That's the
and home loan is later, is it?
Actually, home loan is increasing every year. So home loan average age is now 41 years. 41 years, and post-COVID...
And what, it used to be much younger?
Yes, it used to be in the late 30s. And post-COVID, it's inched up by few years because the increase in property prices, the consumer actually need to save money for down payments. And hence, the average age is going up.
Okay. I take your point. Even I took my home loan in the early 30s. So clearly, I'm not in the Gen Z category. Okay, what about MFIs? Do credit bureaus look at MFIs at all? Because when we did an MFI discussion, at the bottom of the pyramid, everybody knew about CIBIL. They were paying kyunki CIBIL kharab ho jayega. So do you have any data at all whether MFI loans have improved?
Yes, we have data for MFI loan. In fact, the NPS for the MFI industry is 51,000 crore, to be precise, out of a book of 4 lakh crore plus. Now, yes, enough has been spoken about MFI, NPAs and delinquencies, but going forward, what needs to get far more refined for MFI industry is actually looking at a consumer objectively, very similar to the way banks and NBFCs look for underwriting a credit card or a personal loan or a housing loan customer. Right now, it's more of the group parameters that one looks at it. How do you look at objectively? How you include credit score as part of your MFI underwriting? Because that sector needs infusion of credit. It's up to us as an ecosystem to make it more objective.
That's true. No, that's fair. It's just that over there is a lot of mess, as we discovered. They get a group loan as a self-help group, and they get personal loans for the person, so the person is indebted.
Yes.
That's how this 4 loans, 5 loans per person has been on the rise. But you all don't look at that data, loans per person. Is that tapered off?
So we look at the data that how is an MFI consumer graduating to a regular retail loan.
Okay.
So that over years and specifically post-COVID has actually slightly inched up. So today, out of the MFI customers, 15 to 18% across different geographies have either a two-wheeler loan or a personal loan or any of the mobile loans.
Okay.
So there is an overlap.
Exactly.
And that's where it's important that as lenders...
So credit scoring them is well on the way.
Yes.
Okay. So data has reached there. Let me come to the current quarter itself. I think all the data you gave me were for the quarter ended December 2024. Yes. Do you have any, banks will be coming to you dynamically. Are you seeing any improvement in unsecured loan repayment?
Yes. So now, so RBI came up with a circular in January 2025 where banks need to submit data to credit bureaus on a fortnightly basis.
Yes.
Now, that's a very progressive step because it ensures that lenders submit data to CICs on a 15-day basis. So we see early signs of things only improving going forward because your lenders have actually tightened their credit policies, and hence the consumer who are coming through the door have been screened rightfully by the lenders, and we expect going forward the delinquencies to improve. Yes, there might be an outliers. Like right now, when we look at all retail loan products, credit card is an outlier. But when we review the data on personal loans or any of the other two-wheelers, consumer loans, things look good.
Okay, that's very encouraging. Yes. And even credit card, I think the number showed that there is only a marginal year-on-year increase in the amount of days, 90 days past due. Okay, we've been speaking about the negativity of credit scoring. You also have some idea of how credit itself is growing. One of the pain points was last quarter, bank credit fell below nominal GDP.
Yes.
Now 11%, I think. How is it looking to you? Can you see a rise in retail credit itself?
So, yes, with the rate cuts and further expected few other decisions in the upcoming policies, changes, we expect the credit growth to come up, and especially post the festive period, because the country needs that infusion of credit. And if I have to put together some data points, as a nation post-economic liberalization, retail credit has grown significantly. Now, if I have to put some statistics, we have 103 crore adults in the country, 70 crore individuals data within CIBIL, 57 crore are with one credit line ever, and 27 crore Indians are credit active.
Okay.
That's a sizable population. So out of the adult population, 27% of India's population is actually credit active. And the good thing is that out of these 27 crores, almost 18 crore are sitting with only one loan.
Okay.
So it's a need-based requirement of either a home or a vehicle or a two-wheeler. But what has changed specifically in last 3 to 5 years, the new to credit has reduced significantly because the entire community is more, or the lending community is more comfortable with a credit tested borrower vis-a-vis the new to credit.
So the lenders have become cautious.
Yes, lenders have become cautious, and one behavioral change has also happened, that pre-COVID, you had consumers coming, especially the new to credit coming through the two-wheeler channel.
Yes.
And agri.
Yes.
Agri continues to bring in a lot of new to credit customers, but actually the biggest new to credit customer base comes into mobile phone loans.
Okay.
And you look at it, why it has happened, because if you look at the top 20-25 cities, there is a public transport in all those cities. Okay. So if somebody has to come out of a college and join the workforce, they're actually using public transport, but for employment and productivity, they still need the mobile phone.
Okay. All right. Now, I forgot about MSMEs.
Yes.
How have you seen any improvement? Both now, I want volume as well as asset quality.
So asset quality is actually improved year on year, and it's almost on par with retail delinquencies. Okay. That's a good thing. Second is that
volume of credit?
So volume of credit has been more or less stable. It has not grown, neither it has degrown. It has been credit demand and supply has been range bound for last 2 years.
Okay. But what is the credit penetration? I thought you had a very revealing plate on, we have 6.5 crore MSMEs, but how much is credit active?
So, very interesting question, because as I mentioned, retail credit, we have come a long way. When we look at MSMEs, there are different data points quoted on NSS, 6.3 crore, 7 crore, 8 crore.
Yeah.
So if I, just for simplification, if I have to take, say, 7 crore MSMEs in the country, reported ever credited to CIBIL is around 3.4 crore MSMEs. Credit active is only 94 lakhs.
Not even 1 crore.
Yes. So out of the universe of MSMEs in the country, only 12 to 15% MSMEs are credit active. Okay. But their contribution to GDP is 30% for MSMEs. Okay. So there is definitely a huge headroom for us
credit
to...
penetration in...
Credit penetration in MSME, because you have more than 50% who is not in the formal credit sector. Okay. So either they are relying on informal credit sector or trade credit.
Fair point.
So there is a huge opportunity there. And to bring in another flavor on the women entrepreneurs on MSME, some very stark data points come out there.
There's no time for that. Bhavesh, we will call you separately to discuss the gender issues. But very important data that unsecured loan is showing less pain. Credit card loan, yes, has increased a bit, but definitely not worrisome. And the recent data for the current quarter itself is that the amount of defaults in unsecured loan has clearly fallen. That's positive for the listed finance stocks. We have to wrap up on Bazaar on that note. After a break, Chartbusters.